If you look at my yesterday's video, this is my real trade. So I've deployed a ratio spread. Since from last 3 weeks we have been doing the iron fly. If you go back to my YouTube video, so I've just for your reference, right? Let me show you one. See, if you go to playlist, friends, one second, where are we? Okay, see, if you go to my playlist, see, one second, see, I've made a video. See, July 14th iron fly, you have 4 videos, and then the previous week was, what was it, July 7th iron fly, 8 videos. Okay, and then before that we had a July 30th expiry, 9 videos. So basically the reason why I'm just putting everything into playlist is, maybe if someone who is like new visiting my YouTube channel for the first time, right, so he or she will have the reference of the entire trade. So July 30th expiry, right from the first trade deployment till the closure, right? I'm just capturing everything in the playlist. The only thing what I have to do is like, yeah, I know that, so I'll be just renaming this, right? Ash 1, yeah, I've done that, right? Ash 1, Ash 2, Ash. So maybe this sequence you can just follow, so that any people, I mean, so not any people, like whoever is watching my video for the first time, right, so they will be having a clear context. Okay, Ash 1 is like first day, right, day 1 of the trade. So what adjustments I've done second day, third day, fourth day. So this should not stop someone from watching this playlist after 6 months or after 8 months also, because the logic remains the same. So for your reference, I've started creating all these playlists. See, if you look at the playlist, right, you have July 14th 4 videos, then this one was for July 7th strangle. You can also watch the strangle, right? July 7th iron fly and July 30th iron fly. So now what I've started is like, see, if you look at the July 21 ratio spread, so watch this video. I've already shown you the logic yesterday why I went for July 25th ratio spread. So we have done like enough of iron flies. So this is on the ratio spread. So let me quickly take you to my trade. Okay, this is my live trade. Okay, 247 is as a profit. So I've explained you the logic of the ratio spread, but still, in case if someone is not able to understand the ratio spread, I would definitely recommend them to watch my series on the entire ratio spread, or else I'll show you, I'll just give you a quick snapshot. Okay, where is okay, let me take you to, okay, see, if you look at the payoff graph, this is the ratio spread. We all know, right, ratio spread payoff looks like this. If you look at my real trade, more or less same. I'm very bad at drawing, but still try to adjust, friends. So this is a ratio spread, right? The reds, this is your loss side, same thing, this is your loss side. This payoff graph is green side is your minimum to maximum profit, and this is your unlimited loss, because if you, this red area is unlimited loss, this red area is limited loss, because this doesn't have any limit. So that's the reason you have unlimited. So what is ratio spread? Ratio spread is 1 by 2 sold position. See, 1 by 35,100 is your buy, 35,100, see this one, and then 2 sold, 35,500 your first sold position here, and then followed by 35,900. So what does the ratio spread requires? Ratio spread definitely requires that maybe as and when we come close to the expiry, you should be able to trap the market within this green zone. So if you're able to trap the market in the 35,500 between and 35,900, which is almost like 400 points, right, you will be able to get your complete profit 8,154 and a capital of 1 lakh, which is like almost, right, 7 to 8%. And then just in case if the market keeps falling, right, I'll show you, I mean, stay with me for this entire trade. Let's see, that's the reason I started with this presentation, right? What is it? Learn, earn, lose. So I'm not a expert. No one is expert in this market, because market is supreme. It will give you wild moments, you know. For the option seller, the only threat is like gap ups and gap downs. So we never know, I mean, what gap up we can expect. That's what I'm really, even lose, we should be able to digest the loss making trade also. But end of the day, it's all about risk to reward. Whenever we lose, we should lose less. Let me take you. So now let's say I'll plot one more this thing. Let's say this is where your market stands. Sorry, where is that line? So I'll show you everything in the pictorial representation, so that you'll be able to understand. Okay, let me draw one line. Okay, let's say this is your line, friend, meaning this is a market. Okay, market stands somewhere here. Same, if you look at my trade, the market stands, this vertical line is a market stand. So we have our first buy, this is your buy position, this edge is your sold position, first sold position, and this is your second sold position, right? If you're not able to understand, pause the video and try to understand the payoff graph. So now let's say today is what, Friday, right? Today is Friday. We have deployed this trade yesterday. Let's say I'll give an example. Let's say Friday the market came to your break even. This is your break even, right? This point is your break even. So let's say on Friday, either on the opening of the market, or let's say due at 1 o'clock or 2 o'clock, the market stands here at the break even. So you have two options, friends. This blue line plays a very important role. This, see, I'll show you why I give more emphasis on the blue line is, see, I am safe till, this is very important. So I'm just showing you all in a pictorial representation, or else you can saw this in an animated way, right? See, my safety is until here. I'm safe till this point because my blue line is breaching my zero line at this position, maybe at this position, right? So what is that? So I'm safe till almost like 1.82%. See my loss today at 1.92%. I'll be getting into loss of 167, which is okay for me, right? I can just wait for 1.92%. I'll just go to my trading view. I'll just put a alert at 35,400. So I should not be worried until and unless my 35,400 strike rate is breached. If someone wants to do the advanced adjustments, they can put 35,300 before actually the loss starts, right? It's up to you. I'm okay to take 600. Say I'm okay to take a loss of almost like 500. See, end of the day, if I'm just trading with 1 lakh, right, my loss should be like, if it is like 2%, 2,000 is my loss, or else if I take 3%, 3,000 is my loss. So I'm okay to take 50% or 40% of the loss until and unless I'll not be doing my adjustments. So today, if you ask me, I'll not do any adjustments until market makes a move of 2.23%. check the black box. I'm okay to take a loss of 500. And moreover, this is weekend. What did I say? On the weekend, we should not be doing more of adjustments, or we should not be get into such a situation wherein we have like unlimited loss or something like, right? I'm okay till 2.23%. I'll just put an alert at 35,500 in my trading view, and that's it. I'll just exit my terminal. I can just focus on my work. That's the beauty and advantage for all the office goers. Try to put more and more alerts. Until your alert is triggered, you should not be doing any adjustments. See, for me, why unnecessary we should glide the system? See, market cannot make a move of 2.23% in like 5 or 10 minutes, right? It might take 1 hour, 2 hours, or it might take 2 days, 3 days. Market, we cannot predict the market, but at least it cannot make a 2.23% and that too on the upside within like 5 or 10 minutes. So you have some decent time. So put the alerts every 30 minutes. Just go and just check the market. That's it. Do not sit in front of the machine and start gliding the machine. I do not love that type of trading. I want to enjoy the trading. Okay, so now we're talking about the psychology. So let's come back to the trade. See, from 300 it has changed to 30. This is the way the market will test you. You should not get into panic. Either you have 500 loss, right, until the market makes a 2.21%. You should not be doing the adjustments. If the market keeps going down, so then you have to think about your other adjustments. Now what I meant to say is like this blue line plays a very, very important role. Okay, I'll come back to my this. Let's say from market, Friday market stands here. So you have two options. See, what you have to do is like, this is your maximum profit area and this is your maximum loss area. So looking at the size of the loss area, obviously this will be like 1:3. So if your loss is 1 rupee, your profit will be 3 rupees or 4 rupees. That is purely based on the strike selection. How did I arise to this payoff? You have to watch my video. Why? See, I have only 1,800. This is almost like 1:4. See, 2,000 is my loss and 8,000 is my profit. So how did I arise to this premium selection, strike selection? You have to watch my ratio spread series, because if I start talking everything, video will become lengthy. So I'm just assuming my viewers know the basic knowledge about the ratio spread. If you do not know anything about the ratio spread, go and watch my series, or else you can just watch others and then come back to this video. Okay, so now I'll take you back to my this thing. So let's say the market from here, it was standing here. It on Friday morning, you have deployed this trade on Thursday. Friday morning, the market stands here. It all depends on individual perspective. I'll not do any adjustments. Let's say even if the market stands here, but I see still like 200, 300, 400, $500, I'll just give the market some time, right, to see whether it is going up or it is coming down. See, the biggest threat of ratio spread is market should not give you wild moments like from year like 2% up, 3% up, because you'll end up into this maximum loss area, right? If it has given a gap up of 1%, if a market is standing at the break even, I'll just check my blue line. Where is that blue line? See, let's say your blue line, something like blue line starts, right? Let's say see, I'm not good. Let's say this is your blue line. I have the safety till here. So I'll take a risk saying that okay, I have like another 1% of move, right? Though I'm in like zero loss or this thing, so I have another 1%. So based on that, I'll do the adjustments, and it is not fair for me to say that adjustments are very dynamic, right? It all depends on how close or far you are from the expiry, what is the VIX, what is your view of the market. So if I'll be not able to cover each and everything, but definitely I'll be able to share with you the adjustments what I've done. So now let's talk about this one. All right, I'll delete this thing. So I'm just leaving the blue line for you. Watch my series on the blue. See, whenever I say I'm not promoting my videos, friends, see, end of the day, what I need is, you need the price action, you need to know the view of the market, you need to know when exactly your loss will start, at what point you will be in maximum profit, where your profit will start getting into losses, from where the loss will start getting into profit. Unless you guys know this, trading will be very difficult. I said that will be like nightmare for you. So for that reason, I always recommend you to watch my price action videos on the blue line videos. I think I've made like 4 to 5 videos on the blue line, so those are all like eye opener videos. Watch that, your trading will become easy. Okay, so now if this is a situation, so you have to do one thing, friends. See, basically what you can do is like let's say your loss is what was the loss here? This is very important. Loss was 1800. So when the market stands here, right, so just get 100 points inside, meaning you have to exit your profit, you have to exit this call 35,100 and just get it to 35,200. That's it. The moment you do this, what will happen? See, I'll show you live, right? See, now this is my current trade. This is not the ideal thing, but I'll still show you 35,100. I'll go here. See, before that 1,900 is your loss. 35,100, I'll just book 35,100. That means I have to sell, and I'll go 100 points OTM. That's it. I'll buy, right? That's it. This is one. So the moment I've done this, from almost 1,900, I'm able to reduce my loss to 984. Point number 1, right? With one adjustment, I was able to reduce my 1,000 loss, and my loss now is only 984. But check this profit. What was your profit initially? I'm just deselect this thing. Your profit was 8,154, but the moment you have done the adjustments, no doubt you're reducing your loss, but your profit will also decrease. But are you looking for 6,500 on a capital of 1,14,000? So let me show you that calculation. If you are a gambler, I cannot help you, right? Let's see what is 6,000. I'll show you the example, right? 6,500 on a capital of 1,10,000. Let's take the round figure into 100. 5%. Are you expecting 5.9%, which is like almost 6% per week, into 4 weeks per month, into 12 months? Are you expecting 283% per year? If yes, God will save you, right? So what I meant to say is like, you are okay, but the good thing what you have done is like, you were able to reduce your loss from 1,900 to 1,000, right? Slowly, but still we have the unlimited loss area. See, the moment I've done this, check this. See, your profit will reduce, and also your loss will drastically reduce by just giving 2,000, by just giving like 1,500, by just sacrificing 1,500 loss, we were able to mitigate our loss to 50%. If I could have brought it to 200, see, 35,200, what if I get it to 35,300? That's it. Your loss is only 158. See, your profit is also reduced. What if I get it to 35,400? Right? Now your loss is on, you made your what do you say, put side green, but you're consistently reducing. I'm okay for this law. Profit also 3,000, friends, 3,000 profit on a capital of, still I'm okay, right? On a capital of 1,20,000. Let's say 1,20,000 into 100. What is this? Almost 2.4%. I'm absolutely okay. But the beauty what we have done is like we have reduced the loss. Yes, no doubt we have the unlimited loss. I'm just showing you the moment the market gives a what do we say, the quicker momentum, right? Bigger momentum, and then you will end up into loss. But do you see anytime market giving the bigger moments, right? Bigger candles are always on the call side, the big red candles. Go and watch the graph and everything, you'll get to know. But always we are carrying the risk of what? Unlimited loss. But check my safety. I have the safety of almost 4.55%. I'm safe. Though I'll see, though my blue line will give me start showing me the loss, but I'm safe. So that's the reason I wanted to make this video. Okay, I cannot stop myself if I start making the videos, right? So what will you do? The moment the market stands here, you have to reduce your loss. That's it. You have to reduce your loss. This is the right, from 2000 you are able to reduce one. So what will this happen, right? Your range will decrease. The second adjustments what you can do is like, do not do any, this is the one adjustment. The moment you do this, you will be able to make the loss 1000 and then profit will be like only how much? 6500. But if you are an aggressive trader, I will tell you one example, right? Do not do any adjustment. Do not do any adjustment and stay in the trade, right? Stay in the trade. If your view of the market is market will still go up. Let's say the market stands here. This is a very critical place. If let's say the market stands here, so then you can do that adjustments, because do not do unnecessary adjustments. End of the day, market stands at your break even, right? What is break even? Either it can come down again or else it can go up. So rather than if you do the adjustments here, you'll be able to reduce your profit. Yes, no doubt we have to reduce the loss, but still we are on Friday. We have another 4 days to go. Monday, Tuesday, Wednesday, Thursday. This is where like majority of the retailers will end up doing like unnecessary adjustments, right? I'm just giving you a thought process. You can do your adjustments when the market stands here and reduce the loss. So this is your loss area. Or else what you can do is like, let's say the market stands somewhere between your break even and your first sold position. So then do that adjustments on Friday. Either get it to cost to cost, or let it make it to only 200-300 gross. That's it, right? You'll be able to reduce your maximum profit, but still you're able to reduce or mitigate your complete loss, right? Let's say this is Friday, and let's say Monday you are at your first sold position. Let's say this is your ratio spread status. Let's say Monday you are at your sold position, and now many of the YouTubers will say that whenever you are at the first sold position, exit the second sold position because your risk is more. See friends, that's where I tell that, that's where I keep telling that. See, end of the day, your blue lines comes into picture. So let's say your blue line is like this, right? Your blue line bridges from here. Though the market stands at your sold position, yes, no doubt, this buy leg will give you huge profit. This will start giving you huge losses, and this will start giving you minor loss because this is far OTM. But this profit, see, try to understand, friend. When I say huge profit, right? Let me show you. See, what is the premium? 187 of your buy. What is your premium of the sold? Just 82. Half of this. Less than half. What is the premium? 33. Half of this thing. Though this will give you loss, but check the premium of by 187. From 187 it will become 230, 240. So you'll get more profit here rather than your loss. See, though this sell position will give you loss, but overall your trade will be in profit, and it all depends on the momentum. It should not be something like your market was standing here on Friday night. Let's say I'll make you, let's say on Friday market, or maybe on Thursday here, the next day morning market is standing up with a big gap up, then you will end up into loss. And loss, that will all depends on the kind of momentum it has given. Was that a single candle? Was that overnight change, or market opened somewhere maybe let's say here, and then slowly the market is going up? So then that will not give you that much of panic. So you have all your adjustments. So let's take an example. Monday at morning or 11 o'clock the market stands here. You check the blue line. If the blue line is giving you more safety, meaning the loss starts only after like 0.5%, 1%, do not do the adjustment. So let's say the market stands somewhere here, and your blue line is going steep next like 0.5%. So what you have to do is simple, friends. What you have to do is like, see, pay attention, right? What you have to do is like, you have to you have to, hope you will be able to understand, you have to exit your current buy position and you have to get it to 35,300. You can just roll up your call until 35,500, but do it in gradual phase, right? Not very aggressively. So the moment you exit this like 35,100 and you move it to 35,300, you will be able to make your trade something like this. So then you will have profit on your call side. On your put side, definitely you'll have the profit because you are rolling up. So whenever you're rolling up, you're booking the profit of this leg and slowly you're rolling up. So this side will become green for sure, 100%. This side will become green, right? But now what you have to do with this sold position, right? What you have to do with this sold position? Where is that? One second. Where are we? Yeah, what you have to do with this sold position, right? This sold position will, so now when the market stands here, right, your blue line is indicating you that your loss will start and you are towards your unlimited loss. So what you have to do is like first adjustments, get your put inside, roll up your put inside, right? Roll up your put inside until where? 35,300. Don't go till 35,500. 35,500 is our cutoff. That's it. That's the end. Okay. And then what you have to do, you have to just exit this leg, friend. Just exit this leg. That's it. Right? What will happen if you exit this leg? If you exit this leg, see, I'm just deleting this. Boom. The moment you exit this leg, so this will become your typical debit spread. This will become your typical debit spread and you will not have any loss even if the market makes a 10% upper circuit. I'll show you. Stay with me. So what will happen? See, this is my ratio spread. Let's say the market stands here today itself. See, I'm safe till this point. See, I'm safe till this. See, check this projected profit and loss. Even if the market makes a 1% move, I'm still safe. 1.5. Let me show you. 1.5% still I'm in profit. 2% still, yeah, this is where my loss will start. So what will I do? I'm okay to take until 500 loss, right? My loss 553. So now what I'll do, I'll just exit this leg. I'll show you if I can show you this 35,100. Okay, 1 second, friend. I'll delete this to what is it? 35,100. When the market stands here, 35,100, I'll exit and then I'll go for 35,000. Let's say 35,300. Let me show you, right? Or else today's like it's too early because Friday. Okay, let me take you to 35,000. What is it? 5,400. See, we are able to reduce the loss, and then what I'll do, I'll simply, what is my second sold position? 35,900. I'll just sell that 35,900. I'll buy. That means 35,900. I'll just buy back. Am I doing the right thing? 1 second. What is that? 35,900 CE. Sorry, I'm just going with 35,900 CE. Where is it? 35,900 CE. I'll buy back. Simple. This is where I'll be able to convert my ratio spread to what? My debit spread. Yeah, this is not the ideal time for me to do the adjustment because today's Friday morning. So I'm just telling you, what if I do the adjustments on C. Now the moment I do this, your loss is only 620, friend. Your loss is only 620. Check your profit, only 1,880. So that's the reason I keep telling, do not do the aggressive adjustments on Friday itself. I'm just telling you, I'm just opening up that thought process. So this way you can do. So what will happen if I go to 35,500? See, that's it. I mean, this is not the ideal way, but I'll just go back to, but you got a context, right? So your market will stand here, you will be in profit, overall you'll be in profit, right? This you will be like maybe like 1,000 or you'll be profit, and then based on that you have to slowly roll up and get into like easily you can capture like 2 to 3% in the ratio spread. Your unlimited loss situation is gone. The beauty of doing this adjustment is, let me deselect this thing. See, you add a what did we do? Sorry, not this thing. Okay, this one. The moment you do this unlimited loss situation is gone. So you can just hold the trade, no panic. You can have a good sleep, right? You'll be able to enjoy the trade. All right. So this is one of the adjustments. That's what I said, right? You have to convert from debit spread to what? From ratio spread to debit spread. Okay, and let me take you back. Let me take in one more example. Let's say market stands here. or else let's say Monday end of the day market stands here at your break even at your first sold position, but somehow looking at the price action you have let's say your view is like market can go up. So if the market keeps going up, see, what do we want from ratio spread? Market should slowly go up, like zigzag movement. Slowly it should go up, not bigger movement. Bigger movement will give you loss. But let's say next day morning, maybe due to some news and everything, you have a view of the market, say the market can very quickly come to a second sold position, then your loss will start. So what you can do is Monday end of the day, what you have to do is like, this is magical, friend. Monday end of the day, what you have to do is like, you have to just exit this sold position. Exit this sold position only for the overnight. That's it. You have to exit this and convert your ratio spread to debit spread only for the overnight. Next day morning, if the market opens flat based on the market, again you add back your second sold position and convert this to ratio spread. So it's all about DS to ratio spread to DS. If you want protection during the overnight, convert your ratio spread to debit spread. What I meant to say is like, I'll show you all the examples. See, this is your I'll delete everything. This is your ratio spread. So let's say today market stands here and we are at the end of the day, and we are not in a great, I mean in such a loss wherein we are into panic situation. But my view is like, maybe market will go up. So what I'll do, friend, I'll just exit this 35,900 with a profit or loss at 320. Convert your ratio spread to debit spread. This gives you the holding power. This takes you away from the panic situation. Yes, your profit is limited, your loss is also limited. At the end, right, your loss will be only 3,000, your profit will be 6,000. Next day morning 9:20, based on the market open position, whether it has open flat, whether it has open gap down, or whether it is over 0.5%, you have to take the decision and go back and convert this to ratio spread. That's it. Now again you'll say unnecessary, we are sacrificing on the profit, we're giving extra debit. If anyone had that concerns, I cannot help you, because my initial focus is to save my capital. I give least preference to this profit. Even for a 1 lakh, even if I get 2%, that is 2,000 profit, I'll be the happiest person on the universe. So that's the reason I'll be like playing around with that another 6,000 in terms of buying the overnight protection. It can be overnight or it can be during the intraday also. Let's say if you have 3 hours of training sessions, or you are an office goer but you are not in a position to do the adjustments because you have some back-to-back meetings or some seminars, webinars, or you have some emergency. The best way would be like, why should you be worried about this unlimited? Just exit this leg, friend. Exit this leg. That's it. Make this debit spread. At least have peace of mind, right? Only 2,000 has reduced from here. Right, once you're back from the meeting, and then just add back this leg. Who is stopping you? Do not have the standard process of deploying the trades. Say the ratio spread is a ratio. No, from ratio spread to debit spread, from debit spread to ratio spread, from ratio spread to ladder, from ratio spread to strangle, from debit spread to strangle. Am I talking too much? This all we have done in my debit spreads series. You have almost like 20 to 30 videos on the debit spreads. You will not find so many adjustments anywhere on the YouTube at a one single repository, right? You go back to my YouTube, search for the debit spreads, go to the, see, let me show you, friends, let me show you, right? I know there are like very new traders coming, right? I'm glad that they are just finding my YouTube. See, if you go, right, there is debit spread. It's very difficult for me to search my own channel, right? What is debit spread? See, this is the biggest torture for me. See, friends, somewhere, yeah, see, debit spread end to end. You have 16 videos, friends, 16 videos, and along with this you have the original debit spread. See, I'll show you. See, ratio spread, see ratio spread and adjustments. Watch these 8 videos, right? And there are like another like see, psychology, you have 21. Okay, let me show you the debit spread original real-time adjustments. Have made a video. See, expiry, swing trading, strike selection. Where is it? See, there was one video, friend, wherein I had like another 10 to 20 videos wherein I've discussed about the original debit spread adjustments. I'm not sure where is it. Somewhere it should be somewhere. See, real time. Yeah, friends, this one, this 20 videos, real debit spreads and adjustments, all my real trades. I've not simulated in Opstra, friends. These are all my real trades. So you will be finding a lot of what do we say, real-time adjustment. See, made a profit of 8% in 3 days, made a profit of 6% in a day with debit split. Debit split part 4, debit split to butterfly. See, 8% profit with overnight trade. My real debit spread adjustments, 10% profit in TCS and Tata Consumer in just 3 days with debit spread. How to reduce the loss, 16% profit with just overnight. These are all my real trades, friends. Believe me, I've shown you all my logs, all my including my email also. See, I don't want to show everything, but just to have the trust, I've shown you my legs, I've shown you my angel, I've shown you my Zerodha. See, 5% profit in just in 2 hours, 16% profit converted to 30% by plain vanilla debit split. Live debit split for May 26. See, these are all the different. See, these are all 17% profit with overnight trade in Asian Paints. Right, so I want you guys to watch this and my ratio spreads. Okay, let me take you back. See, let me take you back to my original fly. I'll reset. Alright, where is my trade? See, 163 from 300 to 50, 50 to 16. This is the way the market will play with you. So do not do unnecessary adjustments. I will be doing my adjustments only where, see, only at 2.40% now. And let's say the market keep going down, so I'll be explaining everything. So I'll be converting this to, what do we say, strangle. See, let me show you one this thing, right? See, what is your break even? Your break even is 1.53%. so for me to get into the profit, market has to make a move of 1.49%, 1.53%. So I'll show you one example how to decrease this loss. See, no one will be telling you, friends. Let me do that activity right away. Let me see whether that works or not. See, what I'll do is like, what happened? My god, what happened? One second, friend. Let me refresh. Okay, I'll go back to my virtual trade. I'll get this. So this was the iron fly, yesterday's iron fly. So I've not saved the virtual trade, right? Okay, how to get that? I'll go to positions. Okay, this is my butterfly. I'll just do the real analysis. Okay. Now, what was I discussing actually? What was the last point? What I was discussing? Seriously, friend, I forgot actually. What was I discussing? I thought of showing you one thing. Okay, yeah, the adjustments. Okay, now at 129, your break even is 1.56. What I'll do, this is the beauty, friend. Just come back to go to this others. Try and see what will happen if I deploy a call ratio spread. Right? What will happen? Go there. That's it. Check the beauty, friend. Check the beauty. First of all, I'll show you. See the beauty, right? I'll deselect this thing. Your break even is 1.58%. If I deploy my call ratio spread, right? What was for that? What call ratio spread? See the beauty. My break even is only 0.27. If the market makes a move of 0.27%, I'll get into profit. Not today, but I'm just telling, in case if I'm at Friday, let's say if I'm on Wednesday, let's say Wednesday morning, right? 1.47 more looks very difficult actually. So what I'll do, I just try to shift this combo, this entire thing to left side, or else I'll go to the market, I'll go to the break. That's what I'm doing, right? The moment I've deployed, see, from 1.6% I'm able to get it to 0.29%. It has its own complication. Yes, your capital will increase. See, your capital was 1 lakh. Yes, you are paying 1 lakh, but you are, see, your profit is 8,154. The moment you do this adjustment, your capital will increase, your margin will increase, your break even is only like almost like 0.36%. Yes, your loss will increase, but this you have to adjust it. I cannot tell you all the adjustments in one in one session, right? You'll get confused. I can tell you, I mean, if you are interested. That's the reason I've deployed this ratio spread, right? Maybe for the next 2 to 3 weeks I'll deploy the ratio spread. I'll start showing you all the adjustments, like what all different adjustments we can do. This is a very good exercise for you as well as for me. I've done enough of iron fly. Honestly, I'm telling you, friend, I think I can manage the iron fly. Inch 4. I can manage the iron fly. I'm not telling that I will be able to get into 4%, 5%, but at least with my experience, I will be able to manage the iron fly, wherein I'll be able to get like 1 or 2% per week for sure. Even if it is a loss, if I have like huge gap down, gap up, that is not under my control. But if the market is like 0.5% gap up, 0.5, 1% gap down, I will be able to still manage. I will be able to come with a cost to cost, the way you have seen in last 3 iron flies. You have all the proofs in the form of the playlist. Yeah, see, Now we are able to get the loss to 0.37, no, not loss, your break even to 0.37% by just doing one adjustment. This is one of the adjustment. No one will tell you, and this is a way I do play with the sensible. There was one viewer who asked, like, within a short time of period, how are you able to talk about all multiple adjustments? This is the way I do. I do more of experiments. I do not focus on this profit. Honestly, until I do not focus on this profit. Initially, my 6 months to next 1 year would be just to just to understand the market will teach you. And there is one of the friend, I want to take his name, Karthik. Yes, to some extent is right. Market will teach you. If you are watching all these videos as a movie, no one will be able to help you. He has a point. Karthik has a point, right? Yes. I'm not sure. I mean, he gave all the negative comments. I'll not tell it as a negative comments. He has a point. But again, Karthik, sorry for taking your name, Karthik. But again, Karthik, you cannot explore the market on your own, right? First of all, what is stock market? Until unless someone comes and mentors you, right, you will be not able to know what is market, what is adjustment is. First, you need a mentor. You need some sort of hand holding, at least for 1 or 2 months. By that, just in case, until you get familiar with some basics, and then it's your journey. That's the same thing I've done. Without hand holding, without someone in your circle, without a training program, just go for some training program such a way that you get all the basics. And again, you don't even need any training program, friends. If someone is watching, if someone has subscribed my YouTube video, I'll ensure that you do not need any training program. Everything is there for you guys. Only thing is, like, you need to put your own thought process and then continue the journey. Market will teach you. So next 6 months to 1 year, I wanted to explore the market because I wanted to scale up my capital for sure. Even maybe after 1 year, you'll be even seeing like 5 digits, maybe 4 digits, 5 digits profits also from me, because end of the day, it's all about huge capital, high capital, which I'm planning to get. And see, friends, sorry, whenever I make the video, right, I cannot stop myself, right? See, end of the day, I'm not charging, so please bear with me, because during the videos I talk about adjustments, I talk about psychology, I talk about my journey, I talk even about someone who's giving the negative comments or haters. I'll not restrict anyone. I'm open for all the haters, for all the, the negative comments, until and unless it is giving me some lessons learned, giving me some good learning. I'm okay for that, right? If until unless no one is targeting me on the personal front, right? And good to have those comments, basically. Yes, what I meant to say is, like, yeah, the moment I've done this adjustment by deploying call ratio spread, see, I was able to get my break even very close. So 0.3% on expiry day or on Wednesday, if the market keeps going up, right, you will get into your huge profit. If the market keeps falling down, you have to mitigate your loss. So you have all my so-called adjustments in my YouTube. Just you have to search. But again, don't ask me where is the ratio spread series, where is it, because if you're not able to give the 2 minutes or 3 minutes in terms of searching my YouTube, then what can I expect from you? Right? You are here to become a full-time trader, so you need to do some sort of research. Go search, right? If someone is asking, if other viewer is able to share the link, right? I mean, that's what. See, I cannot even get the URLs for you, right? I mean, go see, it took like 1 minute for me to search my own YouTube channel. It's a very pain process, but again, I'm just expecting from you guys is go back to the not only my YouTube video, right? Watch others also, but what I meant to say is, like, this adjustments and everything, you have to do it on your own. If someone is saying there are only 3 adjustments, don't even believe. There should be hundreds of adjustments. It all depends on your trading style, on your comfort zone, on your risk appetite, right? So I think we have discussed with the animated way. So I think this should be sufficient, friend. And you know, right, as and when you make your trade, the profit will decrease. This is the way it happens, right? And let's say you have already, again, you have done the roll up, right? Your profit will increase on the put side, but it has an adverse effect. Your profit will reduce on the call side. Simple, friends. See, you have to opt now whether you are giving more preference for your profit or for your risk. So one fine day, if your trade has become green on the put side, and also, so then exit this leg. That's it. Make it a debit spread. So this way you have green here, right? You made your trading green by just playing with the market, and you have green area. Leave it. That's it. You can hold this trade. Don't get influenced by looking at this profit. Many of the 99% of the retailers will focus only on this 9,000. They don't even know what is 9,000 and a capital of this thing. Or else I'll say basically this one. What is 8,000 and a capital of 112? Is this your realistic expectation? So then you are a gambler. No, try to target 2%. Try to target 2% per week. Even 2% is huge. And then sacrifice the remaining 7,000 or 6,000 in terms of playing around with the market, in terms of buying that overnight safety, or just converting from your debit spread to, from your ratio spread to debit spread again the next day morning based on the market. Okay, again convert back it to ratio spreads. I've shown you everything in a pictorial representation with my own trade. See, my trade is giving me a loss of 300. I'm okay because the market, I want markets to slowly go up, so I'll not do any adjustments until and unless I have a loss of, see, my loss is, if the market keeps going down, right, right, I'll be just converting this to what? Triangle. Let me see, do we have any other, let me see right away, do we have any other adjustments? I have deployed the call ratio spread. What will happen if I deploy the put ratio spread? Right, see, you have such a beautiful payoff graph in front of you. If you have deployed a put ratio spread, right, you have a safety. Say maybe overnight I can just deploy one put ratio spread. Right, even if the market comes down, right, I have a safety of almost, see, I have a safety of almost like minus 2.6%. I have a safety of minus 2.56%. So now with only one adjustment by deploying a put ratio spread, I have converted it to what? My downside was lost, but my downside is now in a green area. Now you will talk about the blue line, so I'll just leave it to you. Watch my blue line video, friend. Green doesn't mean that you will be getting into profit. The blue line says, you see, I'll just zoom it out. This is a very risk. See, my loss will start right. See, I'm in loss now. See, I'm in loss now, right? And my loss will keep increasing because, see, my blue line, this is your zero line, right? My blue line is below the zero line, so I'll get into panic situation. But I can do this adjustment based on my what do you say, chart analysis, on based on my options in OI built up. Okay, so I think we have discussed too many things, and I'm sure I'm just confusingly you, but I'll just stop. You got my point, right? We started with ratio spread, and then slowly we have done the roll up of the put, and then slowly we have converted the ratio spread to debit spread at overnight 3:30. Again the next day morning, again we converted to ratio spread. We started doing the roll up. So the moment we have like good amount of percentage of profit on the put side and also on the call side, so then we have eliminated the second sold position. So then we have converted it to debit spread. If you want me to show you that, I'll show you. This is, let's say, right, I mean, I think you should be able to, right? That's it. If let's say a market stands here, that's it. I'll just exit this leg. I'll convert this to debit spread. By that time this one would have become green, right? We did the roll up, right? Roll up 1, roll up 2, roll up 3. So this has become green. This is entire green, and then you have, even this will become green. That's it. So you have made your trade basically green by doing timely active adjustments, and that's the takeaway from the ratio spread for this week. And